Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a wonderful weekend, wonderful Christmas. Had some time away from the screens. I know I did, which was wonderful. Great to see everybody. All right, so let's get to it. We had a quick little hiatus to Charts and Coffee. First one since we started this show. So thanks for all the By the way, thanks for all the holiday wishes and really looking forward to the new year with all of you. All right, so as always, let's kick it off with a quick look at what we have coming up this week. Is this going to be the Santa Rally week or what? I know that's what a lot of us are wondering. We have a bank holiday in a lot of parts of the world today, as you can see. Monday, we have bank holiday in UK, Canada, New Zealand, Australia. So a little less participation. So we go into Tuesday, bank holiday. Look, they've got it right. Take Monday and Tuesday off. What are we doing? Okay, so we go into Wednesday. We got some crude oil inventory numbers. I'm still quite bearish crude. If you've been following along in the free videos over at the Simpler Trading YouTube channel, and you'll notice it's pretty darn quiet. We go into initial claims on Thursday, some PMI numbers, natty gas. I'm sorry, on Wednesday, PMI, natty gas on Thursday, and we just kind of end Friday. It is a regular trading day, which as you can see is devoid of any hot zones whatsoever. But we do have the whole week, so Santa's got all week to do his thing now that his main job, his day job, is done. So let's get to it. Shows about your questions, so let's get to them. First one, hey there, Tracy. Am I still short oil? Yes. So there's a couple things. This is the second. Let's zoom in here just a little bit. This is the second go round in oil, and of course, as we talk about so much, structure dictates everything. So when we have a double red and we hit the wave, that's an easy short. But as the lower row, as you can see here, of the JT multi goes yellow, yes, I'm still bearish, but it's not a downtrend any longer. It's not an uptrend, but it's not a downtrend any longer. And so we don't mind something a little bit higher up in terms of a short, and that's where that Darvis comes in. So the second go round on the short cannot be as aggressive as the first one because the structure has changed. So we're short pretty much where we sit right now. And you could have called, Tuesday, Wednesday, or even Thursday's action. Sorry, Tuesday, Wednesday, or Thursday's action viable movement higher, which, by the way, for a lot of you, you'll play the USO. I know not everybody trades futures. There's also micro crude. There's regular size crude, which does also have options. So keep in mind, you can play the puts on the USO, which I think is perfectly fine. So yes to that. And Tracy, remember that JT multi dictates, well, yes, we're definitely going to short, but where do we start looking to short? How aggressive, or relatively speaking, conservative are we going to be? So thanks for the question. All right, next up, let's see here. Moving on. Went into withdrawal symptoms. Yeah, I appreciate that. I did too. I enjoy doing charts and coffee. Last week was a good week to take some time and take some time off and chill, and I did. Jimmy asks, I have Qualcomm on my radar. Awesome. 180 and a quarter. My thoughts. So double green, gorgeous double green, no doubt. Structure. Nice consistent green grab candles. And then you're looking at 180 1/4. Um, I think that would be fine for something fairly aggressive. So let's add to that. Let's add to that some moderate and conservative levels. So I'd likely be really fine with buying clear down into 172.5. So all of a sudden, that range is 7 3/4 points at this point. So 180 1/4 is fine for an aggro. I agree with you. Put this thing on your radar, 100%. But then make sure that if we pull back more so than that aggro, call it where our VWAP is sitting, that you have other levels where you've budgeted that this trade is still valid, that the trade could still follow through to the upside, but after it dips a little bit more than say 180 1/4. But Jimmy, yeah, I'm fine with that. I'm fine with that. Let's see. Do I have any particular assets on my mind for 2022, Anise? I'm going to probably wait. When you say assets, I mean, I'm thinking more sectors. Same kind of assets. Am I going to be looking at gold? Sure. Bitcoin? Sure. Some of the same stuff we always look at. But, for me, getting more specific, it'll be sector driven into Q1. Yeah. All right. So, but what kind of sectors? Remember that December is not the month where we look at rotation, right? December is not a month where I'm looking for portfolio managers to sort of step into things like XLC or necessarily even TAN. I'm looking at or IYZ, some of these sectors that have been really quite hammered. I mean, they've moved higher. They have probably a little bit more than I thought they would. But ultimately, I'm going to stick with strength getting stronger, stick with the uptrends. And then in January, we'll start thinking about, how and where we can get long some of the more beleaguered corners of the market. So not so much assets, but sectors. All right. Good morning. Good morning. How do you get the JT multi, JG? It's available in, I think we have it in the store, but I've also made it available to members in the different services. So it's usually going to be in the room drive of, say, the Sector Secrets Mastery, places like that where I've made it available. I think it's in the Mastery room drive, but I'll have to double check. A version of it might be. But we've always made it available in classes. Okay, we've always made it available in classes. So usually what I'll do is when I do a class, I'll put the indicators that you need to be able to understand what I'm teaching and what we're doing in that class. Those are usually going to be included. So thanks for the question. What are my thoughts on corn options? Corn's been looking quite good, Alexander. Yeah, and it looks kind of boring and it looks like a very shallow uptrend, but it's north of the 200 propulsion. These white dots right here. It's got a nice string of 21 propulsion, which is to say that the moving average cross and the interaction with price has happened in such a way that there's a high likelihood that the yellow dots represent the 13 EMA, the green dots represent the 21, the kind of reddish, maroonish, that's 55, and the 200 EMA. When those dots are on, it tells me that moving average is going to have a higher likelihood of acting as support. And then as we turn into an uptrend here, a pretty darn nice one, pullbacks are viable, Alexander. Yeah, pullbacks are absolutely viable. So thanks for the question. All right, any thoughts on MTTR? Okay, double TR. I can't say that I do. Um, like anything else, it could benefit from this time of year. It's north of 200. When it has moved, it's been bullish. I don't want to short it, but I can't say that um, other than maybe a momentum break, if we consolidate for a little bit longer, or even a test of 20, which when we're flirting with the 20 major psychological level, that's oftentimes a very cool level to presume there's going to be size. And then we can also confirm that with the volume ledge in that area. So, I mean, I'd be bullish, but be patient. So I don't really have any thoughts other than that on MTTR. But I think there's a neat buy that could be waiting with a little bit of weakness or a little bit of compression so we can get that nice expansion move. All right, what are my targets on SPX? Akil, I don't usually focus on projecting where the markets are going to go. So my targets are really just resistance levels, major psychological levels, volume levels. So I don't have quote unquote targets. I leave that to the geniuses on television. So what I'll say is right now we're at resistance. This would be one kind of target. We've got a major psychological level here at 4,800. Major psychological levels are another kind of target. If you wanted to do a Fibonacci project, extension to project where mathematically we could expand to, that's fine as well. But I don't do targets. I don't know if that's the question. I mean, targets and resistance when I'm long, targets and support when I'm short are pretty much synonymous. So where we are right now, look at previous highs, major psychological levels. You can look at volume ledges. Again, you could probably pull a pretty decent retracement to project where that next level is going to be. That's what I would do. I'd probably lean on Darvis for previous resistance, major psychological levels, and probably pull a fib retracement, extension, and see where we are beyond, say, 100% retracement. Where's a 272? Where's a 1.618? That would probably be a good place to start. But don't ignore 4,800, All right, next up is, let's see, let me grab the SPY and the ES, though, because normally I'm not looking at the SPX, Akil. Normally what I'm going to do is focus on the S&P futures and then let that translate over to the SPY or the SPX, right? So that's where, this is, by the way, this is where, and I will say Santa probably came a little bit earlier than this week, but you can already see the first target that we're going to be having to contend with. So those two Darvis levels right there. That's resistance. 4,750, I would probably keep in mind, and then 4,800, which is exactly what we talked about on the SPX version. And then again, there's two ways you can look at extensions. You can do a 3-point extension, or you can just do an extension for the last major move. They're probably going to put you in the same vicinity. And I would probably pull that extension if I were going to do it. The 3-point, that'd be pretty easy, right? And then you could do your extension from there. If not, I would pull the extension from this move right here. So you can do a 3-point, or you can just pull the extension from this. And then that should give you, again, another set of levels to consider. All right, very cool. Okay, you know what? And while we're looking at the S&P, let's take a look at the NASDAQ. Now notice the NAS isn't quite in the same spot that the S&P is in because we still have this resistance here, right? This resistance up in here. And by the way, there's actually three times take a look at this. 3 times we've exhausted at this area in here. So I'm going to presume it's going to be resistance again. So this is what I mean about if you're looking at targets and you're looking at where the market could go, ask yourself, what does it have to get through, right? So if you're wondering where could the market go, what does the market have to get through to keep going? I think a lot of times the way in which price progresses is more like a tough mudder. It's more like a Spartan race. It's more like one of these obstacle courses where, what are the obstacles in the way? And we have to watch to see if price can overcome them. And if they can, well, then that obstacle then is in the rearview mirror, and we can look to whatever the next obstacle is. So thanks for the question on the SPX. And you know what? Let's go ahead and just kind of round it out to what's going on the Dow. Dow is somewhere in the middle of SPX and NDX, or S&P futures and NASDAQ futures. Again, what's sitting overhead? Darvas level here, Darvas level here, another Darvas there. Look at all these obstacles to the upside. And then whichever ones accompany a major psychological level, whichever ones accompany a volume ledge, that'll be even more helpful to determine if that level is a little bit more formidable than one that's just a Darvas level, or just a Darvas signal, or just a brand new high, or things of that nature. So, oh, cat's making a cameo on the, oh, you can't see him, the sun's in the way. How you doing? How you doing, buddy? Hey, he's been sleeping all morning. So then there's that angle of it. Now, if we're talking about NDX or SPX or ESNQ, remember that XLK, XLC, XLY, these are all going to be part of that conversation. XLF, XLV, right? Healthcare is moving higher. One of the reasons that the S&P is doing as well as it is, I mean, take a look at the relative outperformance, trying to bust up to new highs. XLK, XLV, so 2 out of the 3 heavy weighted sectors within it. So this is where I say your relative outperformance this time of year may not be ideally suited to the broader average. I'm not looking necessarily for the markets to rally broadly this week, but I think you're going to see individual sectors are going to be where a lot of that Santa rally is going to take place. And then if you're wondering, well, why is the S&P a relative outperformer? It's because 2 out of the 3 sectors. Now, if financials, for whatever reason, pick up the pace, now financials are a mess right now, but if they were to, S&P would just fire away on all cylinders. And if financials get going, keep an eye on the Dow, because the financials are the #1 weighted sector within the Dow, followed by tech. So that XLV, XLF, XLK combination is going to play out bullishly if it moves higher, play out strongly, more pronounced in the S&P and in the Dow. So again, when you look at some of those individual indices, right, remember their composition. All right, next up is KRE. KRE, I'd be really careful, Michael. I've loved KRE for a really long time in terms of the way that it's been so good to us, but financials have really struggled. Yeah, let's just be really careful with financials, whether that be KRE or XLE for that matter. All right. Is the UUP setup still valid? Yes. Oh, gosh, yes. Oh, yeah. Dollar index holding the wave. Yeah, I still like this. Just remember, to your point, is it still valid? It's not an uptrend anymore. So I don't mind to be a little bit more moderate to conservative on the zone because of the yellow, but it's definitely a buy. Oh gosh, yes. Yeah, absolutely. Absolutely. I do believe it's a valid buy. Yeah. Is CLOV? It is, but remember, it's its own little world, Al, and it's not tracking with XLV at all. Yeah. So, I mean, I largely would believe people would think Clover would be, but it's its own little world. Yeah. And it's not moving with the broader averages. So be careful with that one. Yeah. Um, let's see. I did a webinar in 2021, a year of selective trading, anything like that for 2022. Likely not. I talked to Trish about doing something like that at the end of this year. Stay tuned because I think what we're going to end up doing is a webinar probably come February, because I'd really like to see the way in which some of the sector rotation plays out. I have a lot of hypotheses, but we want the sector rotation to play out to give us our setup. So keep an eye sometime in February. Okay, thanks for the question. All right, gang, and just like that, thanks as always for joining me for Charts and Coffee. Missed you all last week. Good to see everybody here today. I'll see you tomorrow, same time, same station. In the meanwhile, be good to each other. I'll talk with you soon.